What's going on, everyone? And welcome to our first backtesting sort of live session. As the channel continues to evolve, continues to develop, we're kind of always looking for new ways to, sort of bring more in-depth content or add more value. But I guess also document our journeys in a way that promotes our development as traders, our progression as traders. As you both know, we both prepping for the 100K challenge. So yeah, shout out to Marcy for this idea of having these live backtesting sessions where, yeah, we really, I think it's just really raw, and you guys get a good look at one, how we backtest, which is, I think, an area a lot of traders struggle with. I think just looking back at when I first started backtesting to sort of how I backtest now, there's not a lot more focus, a lot more intention. It's not just whipping up charts and sort of just, I don't know. At first, I didn't really know how to backtest, and I spent a lot of hours in front of the charts backtesting, but looking in hindsight now, realizing that I wasn't getting as much value out of those sessions. So I think these sessions are to show you how we backtest. We'll obviously get better as we go on, because I think with these live sessions, obviously, there'll be a lot more focus on, the process itself, and obviously what we trying to get out of the session. So it feels like a win-win for everyone. And so we're going to be doing these individually. Obviously, we trade similarly, but we have our own unique styles. And these trades that we document in these backtesting sessions are going to go towards, obviously, that 200 trade target that we are trying to achieve before the funded challenge. And so that's, this contributes towards that preparation. And I think it's going to be really interesting just to look back on all these sessions and how strategies have evolved and gotten better and, gotten sharper. And yeah, give you guys, again, just that behind the scenes look on how we are evolving, how we are prepping. And look, this isn't just a session to, sit back and watch and, take notes. Of course, that's great. Always do that. But, why not use this as a focus session to backtest with me? So yeah, if you have any questions, if there's obviously anything that you don't understand that I'm maybe not explaining clearly, then yeah, it's also a platform just for you to ask those questions. And yeah, if we have a bit of time at the end, these should run about an hour. I'll just explain what I'm going to go through in a bit. But yeah, if we have some time at the end, then I'll jump onto some live charts and we'll see how the market's developing and if there's any potential setups. So far for the week, nothing for me. It's been a crazy, crazy week. For those of you who don't know, I was offered a job in Cape Town, have accepted that. Your boy is switching over into financial services. I think I explained it in our previous, if not the previous podcast, one before that. So yeah, I currently live in Durban. For those of you who aren't from South Africa, it's in South Africa, and I'm moving to Cape Town, South Africa. So this week was moving week for our furniture. We're still in our apartment. We're only driving down next week. And so it's just been madness, obviously packing for that, the movers having to come, literally staying in like a makeshift home just for that period. And so that was just a hectic weekend. Monday was obviously a public holiday. Movers came Tuesday, but Tuesday I wasn't even home when they were here. Fortunately, someone was here though, to obviously help them move the stuff out. I was just on site. 2 crazy days on site, Tuesday, Wednesday. And then Thursday was my first proper day in the office. Yeah, didn't catch anything today. But yeah, it's just been a frantic week, a lot of planning and stuff going into this move. And so I'm also trying to be a bit lenient on myself, still trying to stick to the processes, stay as in tune with the market as possible, but also understanding that there's so much more on the plate. Obviously, with this move and all the things we have to, prepare, and, securing a new apartment and stuff in Cape Town. It's just a lot going on. So, yeah, giving myself a little bit of grace, but trying, like I said, nonetheless, to stick to the processes and yeah, just keep carrying on because time waits for no man or woman. So let's jump into it. Today's session focus will be on the price delivery model. It's a foundational ICT concept, something that I've recently learned. Obviously, if you look back to the Road to 100K challenge, you know what content I had almost committed to going through in this time. But obviously, as things go on, you discover new things. I'm now, learning from the source. If you follow ICT on YouTube or have for a while, you know that he's posted everything on YouTube, literally all his private mentorships, all his lectures, everything is there for free. And obviously nothing, the concepts don't change. It's literally an encyclopedia, a course, if you will. But so much knowledge, so much content. What we obviously see today is a lot of traders, previous students of his, condensing that material and obviously delivering it in a way that's a lot more synthesized and easier to digest, which is great. But just with the type of person I am, it's like I don't know. I like getting my information from the source. I like understanding things from first principle. There was always questions that I had with all the videos that I've been watching, and so to get it from him, from the source, it's like there's about 600 odd videos on there, and so I'm not going to get through them all. Not all of them are relevant, but yeah, everything I need to understand the strategy and to understand this strategy from first principles, more specifically, is on that channel. And so the price delivery model, which basically details how price is delivered in any period of time, because time is fractal. So whether that's over a session, over a day, over a week, over a month, it's all rooted in in that there's four almost phases of the market. There's consolidation, there's expansion, there's retracement, and there's reversal, right? And everything starts with consolidation. We, as traders, obviously that's a boring period of time. We feel as though nothing much is happening, but there's always something happening, right? And so from the consolidation, we're going to get an expansion. We will never get a retracement from consolidation. We'll never get a reversal from consolidation. We have to expand. The market breaks out either higher or lower. So from consolidation, we go into expansion. From expansion, one of two things happens. We go into we either retrace or we get a reversal. A retracement is more of a pullback before we then continue in the direction that price expanded in. So if we broke to the upside, we'll get a pullback, a retracement, and then we'll get a continuation, a further expansion. And if we reverse, a reversal in itself is a distribution of price. It's an impulsive move. It's an expansion, if you will. And so we either get that retracement and continuation, or we get a reversal after the expansion, after the consolidation. And then after the continuation or the reversal, we then go back into the consolidation. And so under each of these, I've almost listed what comes after that, or what can only come after that, because something now that I've taken away from this, and ICT mentions this, is that so often we think that we have this decision fatigue with not knowing obviously what the market's going to do next, and feeling like there's so many things that could happen, and we struggle to either pull the trigger, or we don't know whether when we're going to pull the trigger, it's going to be in the correct direction. But this model provides a framework of very limited options, and there's only so few things that can happen depending on what's happening at the moment. And so, yeah, learned that in theory, wanting to apply that now. I'll be on EURUSD. Start date will be the beginning of June. Yeah, I'm very big on backtesting the most recent sort of period of price, just because obviously the market evolves over time. If I go back and start backtesting January 2020, not that this won't work, it should work in theory, but obviously the market is quite intricate, and it sort of evolves over time. And while the concepts may remain, how they are playing out in this current period of time may not be the same, if that makes sense. And if you've been trading long enough, you kind of understand what that means. I'm trading one time frame. It'll be only on the 15-minute, and this session is strictly an observation session, meaning I won't be taking any trades. I'll just be observing. And I like to do that, especially when it's the first time I'll be taking or I'll be testing a theory or concept. And so what I'll do is, you'll see when I go to the charts now, I've almost broken it up into the time periods or the days. I'll let a day play out and observe it and make comments. And then at the end of that day, I'll come back to this list and try to make sense of, okay, we consolidated, and then what happened next? Did we expand? Okay, then after we expanded, we retraced. Okay, cool. Then we expanded again. Okay, cool. That played out. And this is really just training the eye, training the mind to be aware of these things that play out. Because you'll find, especially with newer concepts that you're trying to learn, it's very hard to implement them when you're not used to seeing them. So this session is primarily for the purpose of getting used to seeing these things. But I think it's also a good place to start, obviously being the first backtesting session for anyone who's new to backtesting. Maybe you thought you just had to, you have to take a trade in a backtesting session. At least I used to think so. And that's not the case. Some backtesting sessions, you don't take trades. It's more about observing and getting familiar with how price behaves. And then over time, you get to a point where you can accurately execute, because it's difficult to execute when you don't even know what you're looking for. And so, yeah, it's purely an observation session. So while the price delivery model is the main focus, what I will be also paying attention to is market structure, fair value gaps, and time, because everything needs to happen, within a certain context. While this delivery model is, the foundation of the strategy, and it's how price moves, it's used in conjunction with other concepts and tools to time or make sense of why it's happening. And if we're going to retrace, where are we going to retrace to? Are we tracing into an order block, into a fair value gap? If we are consolidating, when are we consolidating? Over time, I'll notice that, okay, then I'll start paying more attention to, okay, price consolidates over the Asian session, the Asian range, London open, we get that manipulation, that's the expansion. And then obviously we get the pullback or the reversal, whatever it is. So time is quite an important concept. True opens are as well. If you've listened to some of my other videos, you obviously understand what those are. And fair value gaps are, the main key levels that I'll be focusing on. both one-sided and two-sided fair value gaps. And then obviously market structure, which is one of the most basic, but for me personally, still one of the most difficult concepts. I think because what defines important structure is not something I've been able to, I guess, master or get a good grip on. I've obviously previously sort of defined it as close above a high, close above a low, that's a new low, that's your new market structure. Then obviously the previous high, previous higher, or previous lower high or higher low is your, obviously that's your other structural point. But I think more particularly with ICT strategy, it's just not that plain and simple. And so I'm in observing the price delivery model and when certain concepts when certain phases form and when they transition, trying to pay attention to what defines important structure. What should I be looking for? Does price always close above a high before it shifts structure? Maybe it doesn't. Maybe it just wicks. Maybe a failure to make a new high is an indication that price is going to reverse. I think there's a few things I'm looking for when it comes to market structure. But yeah, in a nutshell, that is what I'm looking for. And that was a bit detailed, just to show you guys that it's also about, I think, prepping for your backtesting session and understanding what you're looking for. And I think this has helped me sort of gain a lot of clarity in terms of what I'm looking for now, instead of just opening up the chart and going back to a certain date and just jumping on and backtesting. So let us switch to our chart. Okay. So yeah, I'm on TradingView. I am on the Pro plan, and so I can go back in time. I think if I go back, I think anything beyond a month, like 2 months back, I can't go down to the 1 minute. I stand to be corrected. I'm at the beginning of June here, and I can still go down to the 1 minute chart. So yeah, I think just for me personally, it's just the best sort of way to backtest. I've tried a couple of other softwares like Forex Tester, but that never really panned out for me. And so not paying attention to, high time frame, all of that, just trying to pay attention to the price delivery model. Okay, I can see prices consolidating here. This is obviously a Sunday evening, but this would be agent session. That's a consolidation. I'm going to look for expansion, then a reversal, and then a continuation, or retracement, and then a continuation. On expansion, that's going to be my manipulation, and then a reversal lower. So looking for one of two things, really. So like I said, I'm going to let it play out for the day, comment if need be, and then after the day, I'll just close it and see how price played out. So let's see. I wonder whether that could be classified as an expansion and the retracement, then further expansion. But look, let's see. We've had the true open now. What I see is whatever direction price trades towards at the true open, we're going to get an expansion in the opposite direction. So you see here how we traded higher and then expanded lower. We initially came lower though, those catch me out quite a bit. Oh, jeez. There's no news on this day. Oh, that was New York Open, though. And it seems like that's where we'll close for the day. Okay, so this was actually a fairly clean day of price action. So I'll start my Asian session from the daily open. I think it's from somewhere on there, I think 1 o'clock or so in the morning, 12 or 1. But we can have this point here as our Asian low, this point here, Asian high, session high, but I mean, we're in the London session now, but yeah, fine. And so bottom. So let's just call that our range. And what I had initially thought was the expansion wasn't, we had just formed that Asian high and we came back within that range. Obviously, this is still the low. And then after the true open, we seemed to impulse to the upside, but we never really even breached that high or outside of that range. And then we got the expansion to the downside. So there's our consolidation, as you guys can see, characterized by low momentum, sideways movement, not much change in price action between that point. And then we get the, consolidation. I think I said expansion. Then we get the consolidation lower. Can maybe just make that a different color, orange. Expansion lower, and then we obviously got the reversal to the upside. If we're looking at AMD, accumulation, manipulation, distribution, which obviously just plays into the price delivery model, that's essentially what it is. But to be honest, I had always thought the distribution was opposite to the manipulation, but it clearly doesn't have to be that way. But if we just look at that, what we are essentially getting when price consolidates and then expands, the expansion is, if we're following with a reversal, going to be a manipulation, and then if the reversal comes after the expansion, then obviously that's that distribution in the way that I normally characterize it. But we could obviously, I have seen it, and I haven't been able to explain it, but I guess with this new information now, sort of can. I've seen times where we consolidate and then we expand and then we retrace, but then we continue in the direction that we expanded in. And that's always confused me because I've always defined an expansion as a manipulation, and what follows should be a distribution. And so, yeah, we had a relatively good day of, I guess, that playing out on this day. I'll just leave that on the chart. And just looking at other factors, market structure, we can see that started trading lower. Obviously, from a high time frame, we ran this. Could have just been a run of time-based liquidity. But what we did also have a lower time frame was this run of liquidity here, and then that shift of structure there. But where I would have gotten an entry, I'm not so sure because we didn't get much of a pullback after this. Perhaps on the higher time frame, there was a level at which price traded into. If I'm thinking fair value gaps now, look, if I look to the left, look, there are a few in and around the area price traded, but these are so random. I wouldn't have known that these would be relevant to what's happening now. But I guess if I was expecting this manipulation lower, then maybe I could have been looking out for these. But to be honest, they just seem like random points at the moment. Look, on the high time frame, it could have been something. If we look at this dip here, this was obviously a very large correction to the downside, and then we got that expansion higher. So potentially in the high time frame, there was maybe a 1 hour fair value gap here that we traded into, and then that's where price dipped into, and then we obviously got that reversal on the minute 15. But even looking at more of an aggressive minute 15 strategy, we formed this two-sided fair value gap on the way down after we expanded for the first time out of there, and that obviously when we see a two-sided fair value gap, it's a potential indication that we could invert that at some point, and rightfully so. We did get at this point here the inversion, and then look, once that was inverted, an entry could have been just setting buy limit at the fair value gap lows, maybe just below there, 6 pip, and even if you targeted this opposing time-based liquidity here, could have been 2.38 pips, but obviously my targets are a bit higher than that. Could have been targeting that high potentially. So look, all speculation at the moment because I maybe would not have seen this in the moment, but like I said, it's just good to pay attention to these things. And now that we have one clear expansion, I can maybe just mark out gaps on the chart for how price may unfold the next day. So what you guys will notice with these sessions is there's going to be periods of just silence. Backtesting sessions are like that. There's a lot of sort of just like figuring out as you're going and just plotting and charting. So don't mind that. Don't mind that. But I will definitely try to get into the habit of just thinking out loud, because that's what these sessions are for. It's supposed to be a sort of mental, not brain dump, but you guys know what I mean. So I'm hoping we can at least get through 1 week, just to see how price plays out over the course of the week. Again, if there's any questions, drop them in the comments. And yeah, let's see. So we discussed market structure briefly, just noting obviously that shift there below before we reversed to the upside. We had that run on liquidity and then shifted higher. So it was all very clean. Noted that we didn't really pierce much above this range before we expanded. So I think the consolidation that Asian range held. And then from so this would have actually fallen outside my London kill zone sort of time frame. And so potentially, so if I had taken the entry I just shown you, the inversion of this fair value gap, then that would have fallen within. That was literally at the moment I could take trades again, which is actually no, it was 3 o'clock, so maybe on the close of this candle. But yeah, I don't know if I actually would have caught that position. So let's see how price developed the next day. Just mark up all the fair value gaps to see how price responds to these. Let's see. Yeah. Hi, man. It's fine. It's making me go up. Is that a two-sided or one-sided? Is it two-sided? Yo, we're just getting two-sided fair value gaps. Why do I feel like we got a reversal coming? Let's see. So we have distributed higher. This is actually very clean price action for Monday. Ah, damn it. Now let's try. It's fine. Let's just go back. Yeah. Promise you guys I didn't see what happened. Swear I didn't see. Okay. So we're going to play out the next day now. Yeah, we observe. I'll comment if any comment is necessary, and then we review after the day. So naturally, during Asian, we should expect price to go into a bit of consolidation so that we expand during London. But take note, if we obviously expand over Asian, then we may not get that expansion in London, and we may consolidate. But it seems like we've consolidated. Let's see how the true open behaves. Just run lower. All these fair value gaps just getting annihilated. So yeah, okay. One with the most imbalanced got respect. And it seems like that is all she wrote for the day. Yeah. Okay. So we've had another day. What I'm just taking notes of, just quickly with the fair value, they are making the chart a bit messy. We obviously had these small, obviously any fair value gap is just a 3-candle formation where the middle candle is expansive, and we use the wicks of candle 1 and 3 to plot, that expansion or that range. And so obviously the larger the imbalance, at least this is the framework that I use, the larger the imbalance, the higher the probability that price is going to gravitate towards, mitigate, and respect that level. And so what we saw over this day, at least, was that all these minor ones, all of them were two-sided, which are lower probability fair value gaps. All of them were inverted. And then we into the large, expansive fair value gap, and we seem to be consolidating now. I won't really take this as a reversal, especially on the min 15. But I mean, look, technically it was a reversal because you could have caught a trade up towards this level. I'm not sure where the entry was, but yeah, the largest fair value gap was respected on this day, and that's just something I'm taking note of. So I'll take these off and let's see, what our price delivery model had for us. So this was, mind you, the true open for the week. And so, again, similarly to how I look at the true opens for the day, price in which price, direction in which price distributes in, normally indicates which way the market's going to trade for the rest of the week. We came lower on this day, and so could potentially expect price to expand higher from here or distribute higher. But I'm looking at now my price delivery model. So we actually did kind of expand during the Asian session. So this was our open. We can mark this as the low, but low, high, such a big price difference between that. I really can't say that we were in a Asian range, so to speak. Next bottom. What I can identify is this range. That range there. We expanded higher and went into expansion. Then we reversed for the rest of the day. I'll just mark the end of that. So again, going back to the focus of the session, I'm looking for price delivery model, consolidation, expansion, retracement, continuation, or reversal, and then trying to align it with market structure, fair value gaps, time. Obviously, over time, this is to build a strategy that can, that I can use as an edge, so that if I see something happen over Asian, then at London Open, I look for something, and then obviously look to trade in that direction. On this day, didn't really happen that way. I wouldn't have been trading at this point, but I think nonetheless, I can observe that we got this consolidation as much as it was, from midnight up until it was a 2-hour consolidation. We then clearly expanded to the upside, and then we reversed after that. Even in that reversal, we reversed, and then as we reversed, just looking at normally, obviously, when price displaces, then we form those fair value gaps, form those to the downside. We look at a fair value gap there, two-sided, and then we had another two-sided here. Price respected that, and then we went. What we actually didn't have, we did. On the way up, after that expansion, we did form a fair gap, a one-sided, high probability, which we then inverted at this point here when we closed below it. And so observing market structure, we didn't actually get the close below here, but in reality, the bias had shifted from this point here. You can see that. Just put a dash and geez. Market essentially shifted from that point. And so this is going back to now what I have been defining as important market structures, that we have to get the close below to define a market structure. And if I was waiting below this level here, then I would have missed, I wouldn't have taken this as a valid change of character, and I would have been looking for price to the upside, because to me, this structure would have been respected. But this clearly shows that the structure shifted, and we didn't necessarily have to close below that level. But obviously, also just observing other points now, we had a fair value gap, high probability, we inverted it. After we inverted it, we consolidated a bit higher. At the true, still technically consolidating. Hard to tell that, you know, the market was trading high at this point, but, you know, of the two candlesticks, it did trade high. It's a fair value gap, and then we sold off to the downside. Just paying attention to it at the moment, but perhaps over time, yeah, something will be able to form. But I think, again, just what rings true is that we got that price delivery model, we got our consolidation reversed to the downside. Okay. And we look for another day. And what I'm just going to do is, while we are here, is just take screenshots of these 2 days. And I'm going to add this to my Notion template. Because even though I'm not taking trades, I just want to keep reference of, you know, the things I'm observing, so that when I, at any point, come back to the session, yeah, at least I have some images or illustrations to make reference to. And I say break of structure bottom there, you can define that as a break of structure, but then so this is low, session high. Then I can just put some text that says close below, but shifted. Worth to keep note of it. Can delete that. Okay, so we observe how the next day played out now. Not many fair value gaps here. Look, we have one-sided here, but it was, I don't think it was inverted yet. So let's mark it out and see. Actually, so projected. Let's see. It's a micro time frame, and let's just run it to the end of the day. But yeah, you can see that price. I think the tool that I'm noticing price respects or concepts these fair value gaps, and something that I'll probably implement quite heavily in my strategy. So let's see. Asian Open, low momentum, consolidation. We invert that fair value gap to the upside. That is our Asian high as well, our range high. Come down to our range low. We still respect that. Come up higher. We expand lower. Reverse or reverse or retrace. Seems like a retrace. Lower. Expand much lower. So this actually held. Oops. It's definitely news on the day. Let's see what that was. Something to take note to as well. You don't need to call the whole day right. You can up and let it play out, and then the market does what it does here, which is it's actually just been range bound the whole day. We look at the opening price and the closing price, not much change. Price has been very choppy between these two areas here, but I think there was clear area of consolidation. I'm just building up to our true open. Consolidation. Expansion. And this one was a bit tricky. Let me scan that to there. Consolidation, expansion. I'm going to count this as reversal. This wick to the upside. Reversal. And then expansion. Continuation. And like I was saying, so again, if you're looking for where we would have maybe entered, fair value gap here. The potential another entry. I just want to see if I play two-sided actually. Fair value gap there. But also, I don't think it would have played out if we take 50% of the Asian range. We wouldn't have really got an entry. But there was that fair value gap. Look, if we got the entry there, even if it wasn't exactly there, let's just put it slightly below, and then we can put our stops potentially above this high here for 5 pips. Target closing time-based liquidity. We actually would never have gotten there. It was about a 4% rate. Arguably could have moved to break even. But just going back to what I was saying, you don't always have to catch the move for the day. And I think I'll probably be taking more of an intraday sort of trading approach. Because one, I think there's just going to be a lot more trades that I can take, which is a lot more data that can help me obviously build my journal, get insights, quicker. But I mean, even intraday, yeah, it's not, doesn't have to be scalping. You know, there won't be a setup every day, but there's going to be a couple of weeks, decent size risk to reward, very session focused. And look, your trade would have stopped you out by like 2 o'clock. And after that, then the market does what it's going to do. But again, delivery model did play out accumulation, expansion, out of that accumulation, reversal, continuation, or expansion later. And while I'm here, I'll just take screen that. Yeah. So then in terms of market structure, look, this was, so one thing that got me is that I thought this was breaking higher when we broke out of this, when we inverted this fair value gap at this point, at this 230 point. But we kind of broke straight back in. These were the lows. Obviously, that first strong close below sort of characterized that as the expansion lower. And then, you know, market structure held in terms of low, you know, high, on that low, high, low, high, and then yeah, low, high, up there. So still all looks very corrective though, down into this area. And then we got that reaction to the upside, but then it eventually just became a bit choppy over the day. So for me, market structure not so clear, to be honest. Fair value gaps, I can see the relevance of them. We had this one at the point where price had begun this downside, held as an area where price respected. We came up, mitigated that, and respected lower. And then again, when this was inverted, but we had this two-sided fair value gap at this point here. That price then respected. Arguably could have been an entry there. Two-sided fair value gap. But look, we was fresh off this entry here. I doubt I would have even been at break even to then enter at these points. But look, if I didn't get an entry here, then after this close below here, and then this new sort of correction, could have looked for an entry in that area to then take price lower. So yeah, got that. And then, yeah, everything was kind of just inverted after that. But yeah, clear fair value gaps, all two-sided, but respected nonetheless. In terms of time, what's clear, yeah, we got true open, and then price started trading higher, and then we sold off from there. Just said it, I think Trader Day said it where it was like, whatever direction price starts trading in after the true open, it's almost as if price gets heavy after that, at that point, and or obviously inversely, if it comes lower, it's like price gets a bit lighter and then obviously shoots to the upside, or higher, drops lower. And so just looking at where maybe price gravitated to as it sort of started trading higher at the true open, we came up into this fair value gap that was here on the minute 15, that was holding, that got slightly inverted, but then we ended up respecting. But also we had this area here which it's a bit too sniper. But I feel myself, but I don't know if I would have caught that. That is precision. Then there's that fair value gap there, obviously. So something I maybe also want to just start paying attention to is, okay, if price is going to start trading higher or lower at the true open, where's it going to? Or is there anything above or below that price can go to? I think that's something very interesting to keep a close eye on. Then we've just got 2 days, 2 more days, and then let's see how this plays out. So Thursday, let us see what price is doing. We're going to expand this over another day just because price has been respecting that, and let's see how much longer it continues to respect that for. This area has become a bit redundant. But is there anything else potentially? Continuing on our theme of price gravitating towards or away from areas. There's that level, which is a fair value gap. And what I will just notice in this area is, okay, we've just had a run of the lows, run of these lows, but also run of these lows here. And so we could potentially be seeing a reversal to the upside. Let's see how the day develops. Let's see how the day develops. So we've got a fair value gap above here. The downside, this is technically an order block as an area where price could gravitate into. Look, I'm not session, so let me actually just out. But what I do have is a fair value gap that I can use. There we go. Fair value gap within a fair value gap. So yeah, let's see. We have interest above and below. That's quite a bit of room for our Asian range. Let's see how price develops. Now we've clear expansion. Now it seems like we're going into a consolidation during London. So if that holds true, then you see, this is where I get confused. When we go from expansion into an expansion. Let's see. True open, we've started to trade lower with structure. Let's see if we break this low. Did indeed. Oh, respected that fair value gap, shifted structure, retrace, and potential expansion to the upside. Seems to start consolidate. It's 2:30, then there's probably news at that time. Okay. So it seems like we got more of a London into New York move on this day. So we obviously expanded during Asia session. We then consolidated slightly here. Consolidated here. And then expanded again. And look, actually, it actually did play out because we have consolidation. Then we can just say from this, let's call it this point here, we got expansion lower. And then we get pullback. We'll try to see where that pulled off. Let's just pull back actually to the bottom of that range. Pullback. And then we got expansion lower. Expansion lower. All right. Agree. Pull back literally to it's not really a session low. It's not not sure what form of time-based liquidity that is. It's just that consolidation low. Then what we can see for London session into London, we get again consolidation. Say to that point. Then we get clear expansion. Taking note that we expanded and respected this fair value gap that we have marked out from the previous day. We got small touch there, and then we respected it again. And then we got the distribution, reversal actually. So consolidation, expansion, reversal on this day. This would have been the entry point. Literally, if we had 1, 2, 3 candlesticks, even if you entered on the close of the second one, your stops below, call it 8 pips. If you don't want to squeeze it, and then targeting the opposing time-based liquidity, probably these highs here. It's about 3.5 odd percent. We may obviously achieve that over Asian session. Oh, we did when the news formed here. So very quick trade. Obviously would have been supported by news. Not sure how prop firm challengers would have responded to that. Obviously taking trades just before a news event, but I mean, this was 1:45. The news event was only potentially a past. May not have been a news event. I'm not too sure on the day. But very clean trade. If we would have caught that priced in the model, true. And yeah, we got another expansion to the upside. I'll take that off for now. The gap has been holding really nicely. And just looking back at what I had mentioned on, at the true open of the week, we on that week started trading lower, and that normally indicates how we'll distribute for the rest of the week. So we have, if you zoom out and look at this period here, this is relatively corrective price action. But even in this range, there have been trade setups, 2.5%, 3.5%, 4% trades. And we haven't even really distributed yet to the upside. But yeah, so price delivery model was there. In terms of market structure, this is very running these close. Got the runner below, got the close below there, and then obviously we shifted structure, but the trade setup came before we shifted that structure. And so again, how could I have determined, or how could I have seen it? It's almost like the trades more often than not play out before structure shifts, and that sort of goes against a lot of your normal retail supply and demand, support and resistance, or traditional market structure concepts, where you wait for that shift of market structure. And look, could have waited for it, and then you enter on that pullback, because we did pull back and then we went. But yeah, there's definitely trade opportunities before that break of structure even occurs. Obviously, depending on a whole lot of other factors too. But from a market structure perspective, very clean. Fair value gaps. I'll plot this one here and extend that for the day, for the last day of the week. Two-sided fair value gap. See how the market responds to that. And in terms of time, yeah, pretty much explained just over the sessions how this is playing out. And let me just screen grab this quickly, and then we'll head into the last trading day. But this was very clean, very, very clean. And then last day of the week, let's see how it goes. We have a clear point below where price could potentially expand into if we want to reverse to the upside. We are very range bound, consolidating, bring Asian high. Depends on we saw trade low from. Look, it's consolidation. Slow consolidation. These are lows. It's high. True open. Downside a bit. Kind of stole that Asian high. We just tapped above that Asian high and started to trade lower. Still pretty much in this range. Friday maybe. Oh, damn. This was NFP. Okay. Should have expected that. Okay. Probably close here for the day. Not a lot of movement. And then we gapped at the open. So looking at Friday, what did we do? Asian high. This was our, that's the Asian high that we did not Expectation low. Like we can say this level expected. To be honest, this is one of the less clear days. Mm. Mm. Consideration. Where did we expand? That's just my question. Where did we expand? Arguably, look, if we hadn't broken above here at London Open and we had remained within this range, then I would have argued that this was the expansion, retracement, and then the continuation lower. But we, which confuses me a bit. Where did we expand to? Unless we just expanded, like this was the expansion. We're consolidating. And look, potentially NFP is that exception. I will still screenshot this, but I'm viewing this as one big expansion because it was very range bound the entire time. And then we obviously got news and we expanded lower for the day. And we expanded lower. So we still went from consolidation to expansion. Not just mark that as such. But look, it's also NFP market, at least from my perspective now, does deviate from just normal trading. And yeah, geez, that's a week. That was the first week of June. A lot of lessons, a lot of takeaways, a lot learned, and how the market operates. Just taking note of, minor sort of just nuances. This, from a market structure perspective on this day, I think this was very clean in that we got this run of liquidity or this raid of liquidity before we expanded lower. Failed to close that, failed to close above that. And then we obviously distributed lower. Fair value in terms of fair value gaps. Yeah, look, this one wasn't really respected on the day. There wasn't much else time-wise. Look, I think there was just a build-up of liquidity on this day in anticipation of that bumps. And yeah, then we got that. And was it actually? Yeah, because Saturday was the first. So expanded on the news. So bit of fundamentals at play here. But yeah, hope you guys enjoyed that first backtesting session. A bit of a long one today. But yeah, I think hopefully there are quite a few takeaways from you in terms of firstly, how I approach backtesting session, being very clear on what I'm focusing on. Doesn't have to always also be a session where there's executions. I think observation is it's a foundational part of getting into a good backtesting regimen, because you're training your eye, training your mind to become familiar with these concepts that you're essentially trying to implement and create an edge out of. And so this was still an hour and about 15 minutes odd. but no trades taken, pure observation, but a lot of, I think, key information and data taken out of this. I definitely have a much better understanding of the price delivery model coming out of this. I think see it more as price tends to consolidate in that Asian session, and then obviously at the true open we get that expansion, and then it was just also nice to be aware that price can expand and then retrace and then continue in the direction of the expansion instead of a full-scale reversal, which I obviously characterize in, the AMD, the accumulation, manipulation, distribution. Price, can just continue after a small reversal. And so I think taking note of how price expands as well. What clues does it leave as it expands? Is it expanding into a key level, or is it forming a key level as it expands? It just goes back to paying attention to how price is developing instead of always just trying to predict what price is doing and just trading in real time with what the market's doing. So yeah, again, hope you guys enjoyed the session. It's going to be more of these. I think Marcy's jumping on his tomorrow, so tune in for that. And don't forget, consistency is the choice you make when you start doing the things you know you should be doing day in and day out.